Gentleman from Arkansas, Mr. Hill, is recognized for 5 minutes.
Thank the chairman. I want to thank my friend from New Jersey because of his 5-minute speech. I have more time for questions because I enjoyed it. I associate myself with it, and it reflects the experience I've had for 35 years in corporate finance. So I appreciate my friend, Mr. MacArthur, and his perspective on the public and private markets. It's been said, that we want more public companies. All of you agree with that universally, to give more opportunities for our pension funds, our 401k plans, our IRA accounts, and that there is absolutely no reason to say that's not the primary objective. We want that opportunity because it shares the prosperity of America. So then it gets down to, well, how do we accomplish that? And one is in sales and trading and research and bringing that company out. That's a key component that we're talking about today. And then the other is the cost of maintaining that public enterprise. And so we've got bills on sort of both sides of those issues. And I was with a company a couple of weeks ago. It's a publicly traded company, $2 billion market cap. One division has 5,000 suppliers. That's a lot. And you can imagine they have a lot of things that they sell to have 5,000 suppliers. But one of the most costly things they have in this public company, long-time public company, $2 billion market cap, is trying to comply with the conflict minerals rule. It just takes over their whole process, trying to prove that they've done that in case they're sued, which they, of course, fully expect to be, because it's not possible to comply with it with 5,000 suppliers in just one division that in a globally sourced enterprise. And so that's an example of what we're talking about, I think, today on the second piece, the cost of maintaining that public enterprise in a competitive way. Mr. Quadman, there was a lot of discussion today about studying research coverage for small issuers before they have an IPO. I'd love for your perspective on maintaining coverage of a small cap issuer after they're public, and then I'll ask Mr. Pascal to comment as well.
No, I think, that's a great question, because we've actually seen some problems with that, where there's actually been a retrenchment of research at times as well. And the reason why I raised MiFID with my opening remarks is that EU rule is actually going to impact research here and is going to impact costs. So it's a matter of, it's a supply and demand issue, right? What are the costs of the research? What are how is it priced out? And it's unfortunate that I think the Jobs Act tried to address some of that, but we actually need to do more of that. And we're going to have to try and also determine with the SEC how we also deal with this in terms of MiFID as well.
Yeah, thank you. Mr. Pascal, what's your view on that in the marketplace? Mike?
It's an absolutely major issue. As I mentioned, we cover 600 companies in research with a focus on small and mid-cap, and the data shows that for companies with a $500 million market cap and below, they have on average about 3 research analysts covering them. Larger cap often will have 25 plus. So it's very important, and those voices that cover them are the voice to the market. MiFID was an appropriate thing to bring up because most market estimates say that the cost that the buy side is willing to pay for sell side research is going to come down by about 1/3 through unbundling. So if you're a small cap name and there's 2 or 3 research analysts covering you today, and the research budget just went down by 1/3, you may lose 1 to 2 of them.
I think it's super important, and I think this $500 million number is a reasonable number. The company I referenced, $2 billion market cap, has 6 regular research firms covering them. I was surprised by that and delighted, and some have long-standing. It's a mix of regional firms and Wall Street firms. In the time I have remaining, I just want to bring up one other issue for you representing SIFMA. Just like we talk about community banks needing relief from regulations, I think the same is true for privately held non-bank broker-dealers. And one way to do that is I have a bill that's going to permanently exempt the peekaboo standard, the audit standard for small private broker-dealers. And I would hope that SIFMA would look at that issue and be supportive of a permanent waiver effectively for the peekaboo standard on audit for a small broker-dealer. It's an introducing broker, not holding customer funds.
Yeah, it's my understanding that that was definitionally caught up in Dodd-Frank, and that some brokers who probably wasn't appropriate for the privately held non-custodial brokers were caught up with some of the regulations, which it would seem to us would make sense.
Good. I look forward to working with you on that. Thank you, Mr. Chairman.
Gentleman's time has expired. With that,